So Nvidia just dropped one of the most incredible earnings reports in modern history. And what did the Nasdaq do? It sold off. Yeah, you heard that right. What in the world is going on? Welcome to the CIY Capital Daily Recap for February 26th. Let's break down this complete paradox and get you ready for tomorrow's session.
The big story of the day, no surprise, is this earnings paradox. I mean, Nvidia delivered what you could argue is a flawless report, just an absolute monster. And yet, the market slammed the sell button. Let's dig into the numbers, because honestly, they're just staggering.
All right, first up, let's talk Q4 revenue. They posted a mind-blowing $68.13 billion. Now, this wasn't just a beat. This was a complete and total demolition of what anyone was expecting.
And then you get to the earnings per share, coming in hot at $1.76. That's another massive beat, folks. It just shows you the incredible profitability they're generating at a massive scale.
But you know, the real story, the one everyone's watching, is the data center revenue, $62.3 billion. This is the engine of the entire AI boom. And it's not just running hot, it's basically showing exponential growth right before our eyes.
And just when you thought that was impressive, check out their guidance for the next quarter, $78 billion. They are literally telling the market, hey, the party isn't over, it's just getting bigger. So with all this unbelievable news, the stock must have absolutely soared, right?
Wrong. The stock ended the day down 5.5%. This is a brutal textbook example of a sell the news event. It tells you all that good news, all that insane optimism, it was already priced in. The market just used the confirmation as an excuse to take profits off the table. So you gotta ask, why the fade? Well, the team here at CIY Capital has pinpointed 4 key reasons. First, the market's in what we call prove-it mode. The numbers were incredible, sure, but now the pressure is on to do it again and again. Second, there are real concerns about AI CapEx sustainability. That's capital expenditure. Can companies really keep spending this much money on AI? Third, we just saw sympathy selling drag down the whole semiconductor sector. And finally, and maybe most importantly, the bar was just priced for absolute perfection. There was zero room for error. And you can see this tale of 2 tapes right here in the session stats. The Dow Jones was basically flat, didn't move. Meanwhile, the Nasdaq dropped over 1%. See, this wasn't a broad market sell-off. Nope. This was a very targeted rotation out of tech, and you can see NQ futures had a wild ride between 25,019 and 25,495. Okay. To really understand what's happening under the hood, we've got to zoom out and look at the cross-market signals. This is how we find out if the big institutional players are really getting nervous and defensive. And yep, the dashboard confirms it. Look at the VIX, our fear gauge, it popped big time today. And at the exact same time the 10-year yield dropped, a rising VIX with falling bond yields is the classic risk-off signal. It's screaming that institutions are hedging their bets and buying protection. All right, so what does this all mean for us? How do we actually trade this? Well, based on today's price action, the CIY Capital team, led by Ron Rose, has mapped out the absolutely critical levels you need to be watching in the NQ tomorrow. Okay, listen up, because this is crucial. If you are trading NQ, these are the lines that have to be on your chart. Resistance is sitting right around the session high of 25,500, with a bigger supply zone way up at 25,875. But to the downside, today's low of 25,019 is your immediate support. And as Ron has been telling everyone all week, that 25,000 level is the absolute line in the sand. You know, today's action actually gave us a really clean, high-probability setup, the gap down short. The entry was right on a failed reclaim of 25,050. You had a tight 50-point stop, and you were targeting the low of the day. This is a perfect example of a structured trade with solid risk management. It's got a defined entry, a defined stop, and a defined target. This is about trading with a plan, not gambling. So, where do we go from here? What could be the next thing to move this market? We've got a few key catalysts coming up that every single trader needs to have on their radar. So, tonight after the bell, we're going to get more tech earnings from Dell and Block. Then, tomorrow morning, the big one, PPI data. If that inflation number comes in hot, it could easily send us crashing right through that 25,000 support level we just talked about. And looking a little further out, all eyes are on the big March FOMC meeting. For now, the team's bias here is staying cautiously bearish. You know, understanding the market action is one thing, but being able to confidently trade it is something else entirely. So the real question is, how do you bridge that gap and actually apply this kind of analysis to your own trading? Well, whether you're just trying to learn to trade futures for the first time, or maybe you're an experienced trader looking to build a more consistent edge, having a personalized plan is everything. That's why one-on-one coaching with a professional trading coach is such a game changer. It helps you build a system that fits your capital and your goals. And you can even start with a small account using micro futures like the MNQ or MES to manage your risk while you learn the ropes. And that wraps up today's recap. Now remember, this is for educational purposes only and is not financial advice. The market gave us a classic paradox today, that's for sure. The question for tomorrow is simple. Will the bears press their advantage, or was this just a one-day wonder? To follow this story and find a trading mentor who can help level up your futures trading, visit CICapital.com or follow @RonRoseTrading for our daily market recaps. We'll see you tomorrow.